And it's important that we have a process that you can follow when closing the general ledger. So what we're going to have is a series of steps you can use to close. And the first thing we need to realize is, well, what journal are we going to do this in? So when we're calculating our profit by closing our revenues and expenses, is there any cash received, any cash paid, credit sales made, or credit purchases of stock? Well, there's actually not. Those have already been recorded in the relevant journals. So what we're going to do is close the ledgers, and that's going to have to get done in the general ledger. And the document we'll need to do that is a memo. So step one is we're going to close all revenue accounts. So you can see here we've got two revenues. We've got cash sales with a credit balance of 9,000 and credit sales with a credit balance of 9,000. We're going to need to reset their balances to zero. So looking at cash sales, we did a debit to cash sales of 9,000. We'll do a debit to credit sales of 12,000. Where do they go? It needs to go to every debit needs a credit. So in this case, we'll send a credit to the profit and loss summary ledger. It has the rules of owner's equity. We're calculating profit. Revenues make profit and owner's equity go up. So that makes sense that that's a credit entry. Just note that we can see the reference. We're writing the term revenue accounts just as one giant total. We're doing it as 12,000. We don't do each ledger individually. A bit like when we do cash at bank, when we post a cash at bank, we write cash receipts or cash payments. When we're closing revenues, we just write the word revenue accounts. Okay. So do a narration. We can see closing of revenue accounts there. It's unlikely this would be a narration question, but you never know. Step two, we've closed all our revenues, so let's go and close all our expenses. So in this case, we've got two. We've got wages of 6 and rent of 9. They're going to need to get closed with a debit. So we'll have one giant debit to profit and loss summary of 15,000. And looking again, we're going to have the reference as expense accounts. We don't do a separate one for wages and a separate one for rent. That'll match up with a credit to wages of 6 and a credit to rent of 6. So looking at that, we've got one debit of 15, which matches up with two credits of 6 and 9,000. Do a narration. So basically what we can tell now is whether we've made a net profit or a net loss. So looking at the ledger on the left, that's a profit and loss summary account where we've actually made a net profit. You can see it's got revenues of $9,400 here, and it's got expenses of $5,100 here. Well, that business has made a profit. So that would be, in this case, 9,400 less 5,100 is 4,300. So we're going to need to send that $4,300 figure somewhere, and we'll learn that in a second. Looking at the ledger on the right, we've got revenues of 5,900, expenses of 78. We've actually made a loss in this instance of $1,900. So we need to do a credit entry in the profit and loss summary account. So that kind of leads us into step 3, which is close the profit and loss summary account to the capital account. And what that means is at the end of the day, profit and loss summary is going to either make the owner's equity or capital account go up or down. Profits make it go up, losses make it go down. So in this case, we can see this business has revenue of 21,000 and expenses of 15. We've got a profit here of $6,000. What we're going to do is send that. That's going to make capital go up. So net profits raise capital on the credit side, and net losses make it go down on the debit side. So looking at the ledger above, what we need to do is we need to shut it down. It's a ledger that only exists on balance day, and that's it. So to close it down, we're going to need to do a debit of 6,000. Where does that go? It's going to have to be a credit into capital, and logically that makes sense. And the reason being, capital or profit will make capital go up. Capital goes up on the credit side, and we have a debit that matches up with a credit. Do our narration, transfer of net profit in this instance. That leaves us to step 4. We've got drawings. Drawings are an item we haven't dealt with in terms of closing them yet. They do need to get closed down. They're period specific. And when you think about it, drawings are going to decrease capital. So in the capital account, drawings should end up on the debit side. So step 4, in this case, we've got drawings of 13,000. So we're going to debit capital of 13. And the reason we're doing that is because we've got a credit in drawings of 13,000. So we have a debit matching with a credit. And you can see the fundamental impact of drawings is that they make capital go down. So therefore you can see that's shown up as a debit in capital. Do a narration, transfer of drawings. So what's the purpose of closing? It's to the profit and loss summary account. That was to help calculate profit for this period. But for drawings, why do we close it? We close it to determine the reduction in capital for this period. Second reason we close profit and loss summary is to reset revenue and expense accounts to zero so we can calculate net profit for next period. For drawings, the second reason we close is so we can reset drawings to zero to calculate drawings for next period. Looking at step 5, the very last step, is we're going to balance the capital ledger for next period. So you can see here we've got an opening balance of 12,000. We seem to have made a profit. We've got an entry from the profit and loss summary account on the credit side, so that would suggest we've made a profit, not a loss, of 6,000. And we've got drawings on the debit side over here of 13,000. So we've closed the drawings to the capital ledger. Balancing that forward, we get a capital balance of $113,000. Kind of raises an interesting question. If we made a profit this period, how come we ended up with less capital? That's because your profit must be balanced against your drawings. In this case, you can see the profit was 6, but the drawings were 13. So what's happened here is we need to remember that capital will go up with a net profit on the credit side. It'll go down with a net loss on the debit side, but it also goes up when there's a capital contribution, and it also goes down when there's drawings. So in this case, why did the capital balance go down despite a profit? That's because the drawings in this case were much bigger than the profit. So what we're going to do is change the owner's equity section of our balance sheet so we can figure this out. So what we're going to do is not just write one figure called capital. What we'll do is we'll start with the opening balance. So opening capital was 12,000. We'll then add in the net profit, in this case 6, and that equals a total possible equity of $126,000. However, we need to take out our drawings. So what we'll write here is less drawings of 13, and that'll give us a total for owner's equity, which will represent our closing balance in the capital ledger. That'll be 113,000, and that'll go in the second column. So you can see the balance of the capital ledger matches the total of the owner's equity section of 113. And the good part of that is we can see why capital went down very clearly. Net profit of 6, but drawings of 13. It's clear and understandable. The closing process in summation, it's 5 steps. Step 1, we closed all revenues. Step 2, we closed all expenses. Step 3, we closed the profit and loss summary account to the capital account. Step 4, we closed drawings to capital. And step 5, we balanced the capital ledger for next period. It's really important you remember those steps. That'll help you think on your feet no matter what the question entails. You can just remember the steps and rely on that. Looking at the ledgers, the step 1, that was the closing of the revenues. Step 2, that was closing of expenses. Step 3, that was the transference of the the profit to capital of 6,000. And step 4 was closing of drawings. Step 5 was balancing the capital ledger, so that wouldn't be done in the general journal.